Hello everyone. Today is Tuesday, November 25th, 2025. Hope everyone is doing well. I extend my early wishes to everyone for a happy and safe Thanksgiving holidays. Welcome to Tax and Accounting Ride Along, brought to you by Sands Virtual Enterprise LLC, your go-to dose of straight-talking tax and accounting insights for small businesses and the everyday taxpayer and the general public. Today we are going to be discussing another very confusing set of topics in the IRS tax code: estate income taxes versus estate taxes. So without much further ado, let's crank it up and get straight to it.
Today, we're tackling something that causes a lot of confusion. Estate taxes.
It really does.
Specifically, there are two kinds, right? The tax on money the estate earns versus the tax on its total value.
Exactly. And people mix these up all the time.
So our mission today is pretty simple. Pull these two concepts apart, make the difference really clear for you.
And knowing that difference is honestly crucial. Whether you're managing a large inheritance or just, settling a loved one's affairs, it avoids massive headaches down the line.
Okay, let's unpack the first one then. Estate income tax. You said the key here is thinking about flow.
That's the perfect word for it. Flow. This isn't about the assets owned at death. It's purely about income those assets generate after the person has passed away.
So things like interest payments.
Yeah.
Dividends.
Precisely. Or rent coming in from a property the estate now holds. Money that continues to flow into the estate.
Got it. And what triggers this tax? Is there a minimum amount?
Yes. And here's where it often surprises people. The threshold is tiny.
How tiny?
Just $600. If the estate earns $600 or more in gross income during the year, it generally has to file an income tax return.
Wait, really? $600? That seems incredibly low.
It is. It catches a lot of estates, even smaller ones. And that means filing IRS Form 1041. It's an annual thing for the estate itself.
Wow. Okay, so $600 triggers Form 1041. What happens with that income then? Does the estate just pay tax on it?
Well, it can. The income can be taxed at the estate level, and those tax rates can get high pretty quickly.
Okay.
Or, and this is key for planning, the income can be passed through to the beneficiaries.
How does that work?
It's done using a form called Schedule K-1. The income flows out to the beneficiary, and they report it on their personal tax return.
Ah, okay. So using that rental property example, if rent comes in after death.
Yep. That rent is estate income, subject to the $600 rule, Form 1041, the whole process. You absolutely have to track that income flow right from the start.
Makes sense. It sounds like a lot of tracking, focused purely on that cash coming in post-death.
It really is.
All right, let's switch gears then. Let's talk about the other one people maybe hear more about. The estate tax itself, sometimes called the death tax.
Right, the big one, you could say. And the focus here shifts completely. It's not about income flow anymore.
It's about dies.
Total value. This is a one-time tax calculated on the total fair market value of basically everything the person owned at the moment of death.
So house, stocks, bonds, cars, even valuable personal stuff.
Everything. It all gets added up. And the form for this one is totally different too. It's IRS Form 706.
Okay, Form 706 for the total value. Now, here's the part that I think affects most people listening.
Yeah.
The threshold for this tax is massive, isn't it?
Oh, absolutely huge. At the federal level, at least. For 2024, the exclusion amount is $13.61 million per individual.
$13.61 million.
Million, yes. Yeah. And for a married couple, it's double that, $27.22 million, assuming they plan correctly with portability.
So let's be clear. If your total estate, everything you own, is worth less than $13.61 million,
then generally you owe zero federal estate tax. Nothing.
Wow. So the vast majority of estates won't pay this federal tax.
That's correct. Now, state taxes are a different story. Some states do have lower thresholds for their own estate or inheritance taxes, but federally, you need a very large estate to be subject to Form 706.
Okay, so just to sort of recap this for everyone listening, two very different taxes.
Completely different.
Estate income tax, about flow, triggered by just $600 in post-death income. Uses Form 1041.
Right. Focus on the income streams.
And then the estate tax, about total value, the big number, triggered only if the estate exceeds $13.61 million federally. Uses Form 706.
Exactly. Focus on the total net worth at death.
So what's the big takeaway here? Why is this distinction so important for planning?
Well, I think the crucial point connecting it all is this. Your estate could be way, way too small to ever worry about the federal estate tax. nowhere near $13 million.
Right. Well, like most estates.
But if that same modest estate happens to hold some stocks that pay out, say, $700 in dividends the year after death.
Then it does have an estate income tax issue.
Precisely. It crosses that $600 threshold. Suddenly, you've got a Form 1041 filing requirement and potential tax on that $700, even though the main estate tax isn't even on the radar.
That really highlights the need to track everything, even small amounts, after someone passes.
It does. It shows why careful administration is needed for almost any estate, not just the super wealthy ones. You have to manage that income piece.
So what does this all mean for you listening? Understanding these two definitions, income tax versus total value tax, is really that essential first step.
It really is. It helps you ask the right questions and make sure things are handled correctly, securing those finances for the next generation, no matter the size of the estate.
Well, folks, that's a wrap. Thanks for joining us for another episode of Tax and Accounting Ride-Along, courtesy of Sands Virtual Enterprise, LLC. Got feedback or curious questions? Or maybe a topic that needs some airtime? We'd love to hear from you. Connect with us at admin@sve-accountingandtaxes.com or text us at 4045-858513. Also, follow us on Facebook, Instagram, TikTok, YouTube, and LinkedIn for more insights. Catch you next time for more business talks and good times.